All right, we are live. Welcome, everybody, to another episode of the Bootleg Weekly Podcast. I may or may not be watching the basketball game on my other screen, but I am fully here with you in spirit. Roy, how is it going?
Good. It's one of those weeks where, of course, US, if you're not in the US, American Thanksgiving Thursday, then it kicks off the Black Friday, which is kicks off, through Monday, Cyber Monday, the largest shopping event in the world and in the United States as well. And so it's kind of the calm before the storm this week. A little bit less news outside of political ramifications that we're going to talk about tonight from certain appointments related and how they impact HIMSS. We'll talk about a little bit. I know that Tevis also just did a HIMSS weekly without me, never inviting. No, I'm just kidding. But we'll also talk about the potential tariff ramifications as well from certain of the names that we hold. But yeah, like right now, it's kind of the calm before the storm and flurry of a lot of interesting news that'll come out of Cyber Monday. Like next week is going to be pretty exciting.
Yeah, I mean it's Christmas for you Americans. It's your favorite religion, consumerism. You guys get to buy all the stuff. I get to watch amazing videos of people trampling other people to get to buy TVs and other stuff, which is always surreal to see. But I don't think I'm going to buy anything this Black Friday. I don't know. There's nothing that I've been eyeing up. Funny enough, the Canadian government, in an effort to buy votes, is now giving. So they're doing two things. Number one, they're giving everybody who made under 150K, they're giving like $250 a one-time payment. And then number two, starting in over the next 2 months. So basically, because it's shopping season for Christmas, they're making it so that you don't have to pay any taxes on certain goods. So basically, you can do all of your Christmas shopping tax-free. That's the idea. But yeah, there is no such thing. It's not a thing.
Yeah, you guys already had Thanksgiving, so that's all you get is bot votes. We get things like this. Maybe you get it in Canada too, but throw this up on the screen. This was actually announced a little bit earlier today, and it was pushed to my phone from a notification. Just an hour and a half ago. And so Tesla, for a while, got rid of the referral credit. They brought it back. You get $500 if somebody buys off your code. They get $500, I think, as well. They doubled it. It has double the impact for you, and I believe double the impact for the person that's using it because they also get $1,000 off. And between that, there's a lot of extra. You get full self-driving for a while. You get unlimited supercharging, I think, for 3 months, and 0% interest on certain models if you have a certain amount of down payment. How much of an impact do you think this is going to have between now and the end of the year, Tevis?
Not that much is what I'm guessing, but who knows? I mean, the first thing that I saw when I read this was like immediately my sort of investor side of my brain was like, oh, demand concerns? Like what is going on there? Because generally, like that's the counter argument that people give whenever Tesla does anything,
There's always bears.
Well, I mean, it's fair, I guess. Like, I just have to look at what are the incentives for them to do this, and if it's that, like, because they're not making money on this, right?
Yeah,
they're giving out more money, so they expect to get more sales in return. And then my brain goes, okay, well, why would they be looking to juice up their sales going into this next quarter? Which is what then leads to, oh, is there maybe demand concerns?
Yeah, I think it's going to be the opposite. So China insurance numbers, we get those on a weekly basis. Those are looking very good. Of course, they're running some promotions there, 0% interest as well. And every little bit of data that we get, which, is not a lot right now, is indicative of a really nice spend on Tesla products. And I think, honestly, that fourth quarter is going to be ridiculously amazing. And the biggest thing is, this adds a little bit to it, but they have the potentiality of the EV tax credit going away. We talked about that a few weeks ago, didn't we? And just like to recap, I
Yep.
think that most likely that's not going to be through an executive order, just the way the Constitution reads, and it has to go through Congress. Anything like that, that's a tax credit. Trump can kind of play with the reading or interpretation of a couple of those things for the EV tax credit to make it less likely to be able to be available. Most likely, that's going to be passed and removed for next year's budget. So it may take effect as early as October 1st this coming year, or more likely they'll just start it January 1st, 2025, not 2024. Or no, we're in 2024, 2026. Forgot what year it was. So, but there's no certainty of that. There's always a possibility of something else happening. And as a result, I think that that's already a demand lever that's been pushed, not necessarily by Tesla, but by that potentiality. And so a lot of people are just saying, you know what, I'm not going to wait. I'm just going to go ahead and buy now. And this is just, icing on the cake if you qualify for that credit. I know a couple of people that are talking about buying a Tesla at the end of the year. My wife and I talked about it. We may get a new or a used one rather that our son ends up buying from us. But we really want the refreshed Y. So
Yeah. So that's exactly it. And I found this comment funny. So Ford is not doing any incentives. So clearly Ford has no demand concerns at all. They're selling every single model that they can produce. Tesla, on the other hand, is probably struggling. But yeah, I do think it has something to do on just looking on a deeper level, probably with the refreshes. Like if Tesla wants to, if people are waiting for a refresh, then they're not going to be buying today. And if Tesla wants to motivate people to buy today, they're going to be doing that. And then that opens the door for them to launch the refresh in the next couple of months. Roy, how old are you? You look young for a white guy. Notice how he didn't say I look young for a white guy because I'm old as fuck.
wait, I'm white? No, I'm just.
What do you identify as, Roy?
He's assuming my gender too. So I've been introduced. So an aside, we'll get into stocks in just a second. I'm from Alaska. I was invited to the Miss Alaska beauty pageant, teen beauty pageant, when I was 17. I didn't have a beard then, so I don't know. I've been called Miss and Ma'am a number of times, despite the full beard and the deep voice. And I've been introduced as Janine's wife. That's my wife's name, a couple of times. And I'm like, I don't know what else I need to do, but maybe like a big face tattoo or something, or like I'm a dude, I'm a guy. So I'm 44. So yeah.
Yeah, that was way more complicated, I think, than it needed to be, but I love it. I love the explanation. Roy, the 44-year-old white guy.
And I was runner up for the Miss Teen Alaska beauty pageant. So didn't win. No, just kidding. There is a saying from Alaska. It's Alaska where men are men and so are the women. So
I have thoughts on the beauty pageant piece. Maybe not the most recent one, but the ones before that. I will not say them out loud though, because we're recording. But what are we talking about today?
Yeah, more on Tesla. So like the biggest piece of news that came out, of course, was related to the tariffs. This is something that Donald Trump mentioned a number of times when he was running. It's one of the issues, frankly, as an investor and as a voter that concerned me the most is I don't think tariffs over time are beneficial. I mean, they can be in certain respects. They do help your manufacturing base, but it does raise inflation on a number of goods, usually free trade and globalism. I'm a fan of that. But, I'm hoping that he's using this as a negotiation tool. So news came out. Let's pull this up here. From Donald Trump posting on, I think, Truth originally. And I'll just read this if you throw that up there. As everyone is aware, this is Donald Trump's words. By the way, if you're listening, it's not my words. Thousands of people are pouring through Mexico and Canada, bringing crime and drugs capitalized at levels never seen before. Right now, a caravan coming from Mexico, composed of thousands of people, seems to be unstoppable in its quest to come through our currently open border. On January 20th, as one of my many first executive orders, I will sign all necessary documents to charge Mexico and Canada a 25% tariff on all products coming into the United States and its ridiculous open borders. This tariff will remain in effect until such a time as drugs, in particular fentanyl, and all illegal aliens stop this invasion of our country. Both Mexico and Canada have the absolute right and power to easily solve this long-simmering problem. We hereby demand that they use this power, and until such a time that they do, it is time for them to pay a very big price. There's also a mention by him of a 10% across-the-board tariff of China, and that just seems to be that's what we're doing. There's no like negotiation thing. What was your initial reaction to this news, Tevis?
I actually posted a tweet on this news. Let me see if I can pull it up real quick. Here it is. So this is essentially my reaction, Roy, in a nutshell. And got to make sure I don't share the basketball game. But I shared this from The Simpsons, and I said, Canada in a nutshell after the tariffs. So yeah, this is basically where I stand on these tariffs. I actually saw this other post that I shared with you in one of our groups, which highlighted that, well, I guess it was a conversation around who needs who more, and both countries need each other, but I don't think it's really a debate as to who needs who more. Because if I can scroll up here it is. And let me throw this up again. It's very simple. 84% of Mexico's exports go to the US. 77% of Canada's exports go to the US. Trump has more leverage, and he knows it. This is exactly why immediately Justin Trudeau came out and said, hey, I've had great conversations with Trump, and our premier of Ontario came out and held a press conference, and he said it was like a relative stabbing you in the heart. And I'm like, go fuck yourself. And then the Mexican leader also said, hey, we're going to handle the border situation. I saw news around that as well. I think I shared it. Here we go. Breaking news as of today in the morning. Mexican president announces she is stopping the migrant caravans from arriving at the U.S. southern border after Trump's tariff threat. The announcement came only 12 hours later. Wow, that's really interesting, man. So what that means is they could have stopped this all along, and all it took was a little push. Crazy how that works. The guy isn't even in office yet. And I could play you the clip of Justin Trudeau saying, you know, he's here to work with Trump. But it's basically the exact same thing where he's saying, we're going to do everything we can to secure the border so that we don't get tariffed. And that, in a nutshell, is the leverage that Trump has. And it's going part of the way for him to fulfill his promises that he made to people during his electoral campaign, including and not limited to, I think that ceasefire that we just saw, which I think markets will be green tomorrow, because the ceasefire between Israel is going to start tomorrow. I saw news about that as well. There's a lot of stuff, man. Like, cities are cleaning up. The border crisis is seemingly heading in the right direction. This mass deportation campaign, all of these tariffs are actually working as intended. Surprise, surprise, everybody who thought, hey, it's actually going to ruin the American economy. Guess what? It's actually stronger than people had initially thought. And it is a valuable bargaining chip because these countries do need the US. So, I mean, I think you can infer where I stand on this whole thing. I do think that, I mean, just look at the Canadian dollar relative to the US dollar.
Oh, yeah. Yeah, plunged.
Right. And that tells you everything you need to know about what the market feels about this.
Yeah, and I agree. It looks like, you know, both Trudeau and I can't remember the president of Mexico's name, that I know she got elected, but
Rosebaum or something like that.
That sounds about right. Yeah. It seems like that they're willing to negotiate, and so it would surprise me if anything near a 25% tariff hits. There may be like select tariffs on certain industries. 20% above across the board, like one of the biggest impacts. If you throw this up, this is from just a couple of years ago, but I've looked at data from this year and also 2023 as well. And one of the biggest imports is motor vehicles and then motor vehicle parts. Tesla does have some coming from Mexico, but largely these are other manufacturers, and this would certainly drive up those goods and costs as well. Of course, not represented here is agricultural imports. There's a lot of those as well. The other is quite large. I think I saw Captain Crunch mentioning the United States is fully prepared to pay $10 per avocado. So maybe not, but here in Houston, we have it a little bit better. But no, it would have a dramatic impact on inflation, especially from Mexico. Now, I think what's more likely to happen, though, is the tariffs on Canada, the 10% tariffs. Those seem not as extreme, not as aggressive. My concern with that, Tevis, and tell me what you think, is that there will be retaliatory tariffs as well.
Oh, come on. Absolutely not, dude. First of all, the Canada started this whole thing because back last year you had this tax essentially that Canada wanted to make Google pay. Do you remember this whole situation? And
Yeah.
as a result, we now can't get like half of the news articles you can get in the US. Like I have to see them through a VPN or through X when somebody screenshots them. I'll literally have friends in the US send me like an Instagram link, and it'll say this post is not available in your country. And that's basically big tech calling Canada's bluff, where they were like, no, we're not paying you. We're just not going to service the same amount of content that we are to your country. Like Canada has no bite, in my opinion, for them to do anything retaliatory. And I think that the speed in which the government here folded shows their hand perfectly.
So that being said, and there is more, I think, negotiation power for Trump in the United States at this point. However, if they do retaliatory tariffs, I think Trump would just raise it, and then that would just create a trade war, which is not overall beneficial. The full impact of that, as far as inflation, wouldn't really hit. Usually, it can take up to 2 years. It's not necessarily immediate, although if someplace like Mexico, as far as agricultural imports, you'll see that pretty quickly. More so than manufactured goods. But yeah, it's a concern. Of course, the market dipped overnight as a result of this. It was still down. Well, the overall market was up, but certain names are down still as a result of this. But yeah, that was like the biggest piece of news. And it was one of those things that gives the market a little bit more certainty as far as what Trump is thinking, rather than him just mentioning the word tariffs 1,000 times, but not knowing exactly how that's going to play out. So, but the 25% was certainly shocking. I think it got a lot of people's attention, including Canada and Mexico.
Yeah, I saw this clip. It was Kevin O'Leary. I'm not sure if you know who that is, but he's one of these talking heads investor guys. He was on, I think, Shark Tank or the Canadian version. Anyways, he's Canadian, and he was talking to one of these outlets, Fox News or whatever, and his recommendation, he's super anti Trudeau, and he basically, maybe I can find this clip actually, but his recommendation was that Trump should just go circumvent Trudeau and go directly to talking with the leader of the opposition, because currently the leader of the opposition, from the most recent polling, has a supermajority. So every other party combined doesn't get to more seats than he does. And so it's like, if there was an election today, like he's winning by a long shot, by a long shot. Now we'll see what happens. And this is also the reason why they're doing the $250, like basically bribe, and the 2 months without taxes. But what's happening right now is that the Liberal Party, and I don't want to get into politics, but the Liberal Party doesn't have a majority. So it's like a minority government, and they're being propped up by the NDP, which is like another, proxy Liberal Party. And they are forming a coalition government to stay in power. Now, both parties know that they're not going to win re-election, and they're all going to get voted out. And so they refuse to call an election until we get to that date. It's going to be October 2025, I think it is, something like that, September or October 2025. And so basically now we just have to wait, even though like 80% plus of the country has already voted in these polls. And okay, we might argue that there's a variance between the people who actually vote, but we know that like we had by-elections here recently whereby metropolitan areas in Toronto, like there was one, and in Montreal as well, there was one that had been a liberal stronghold, like a riding that had been liberal since like the 70s and 80s, and they finally flipped blue. And so, or conservative or Republican, however you
Blue
want
is
to call it.
conservative in Canada, I guess.
Blue is conservative in Canada, red is liberal.
You
Everything's
guys are so
backwards.
backwards. Just
Yeah,
kidding.
I know. So that basically flipped from Democrat to Republican, to use your terms, and that was a huge shock, and it was a huge moral blow to the Liberal Party, which is your Democrat Party, because they lost this like super safe stronghold of a riding, and now from all this polling, I'm sure I have it, bookmarked here somewhere. I share it with you guys all the time. So it's very clear that he's going to win. And the leader of the opposition is this very common sense, rational, pragmatic guy who really wants to lower the inflation over here, lower the spending costs, build more housing. Like, he has a very common sense plan. And it was really interesting. Kevin O'Leary, when asked by this like Fox News, I think it was, or MSNBC, whatever, he basically said, hey, look, Trump should just go and negotiate with this guy, because in like 9 months, this guy's going to be in power anyways. It's a completely moot point to be negotiating with Trudeau at this point.
Yeah. It'll be interesting to see how that plays out. Now, as far as like the other big piece of news that I wanted to hit tonight, and maybe we'll talk some Celsius. I see some comments there. And I did want to mention maybe a little bit about PayPal at the end. If not, it'll come out in my article tomorrow. There was a couple of appointments, but the big one that relates to one of our holdings, HIMS, is Martin, is it McCary or Macari? Exactly.
Yeah,
Yes.
Macquarie or something.
Macri. Yeah, like I never pronounce it right. I always see it, and I've heard it, but it just hasn't stuck. So he was selected as the head of the FDA, and so of course, did the normal thing where Republicans are like, this is great, and Democrats are like, this is terrible. Seems okay to me. How does this impact HIMS, Tevis?
Yeah, it's obviously very bullish. I mean, we talked about this on HIMS Weekly, but this person is going to be somebody who is pro the compounders. I mean, on HIMS Weekly, Benuel had a sort of more rational counter take, saying that, well, RFK might cancel this guy out. But I think that we both realize that it's better than having somebody who is very against compounders from an FDA perspective. And so it finally seems as though HIMS is going to have some tailwinds from that perspective as well, because this guy, he's very close to compounders himself. And you can argue that there's conflicts of interest there or whatever, but it's better than who we had, and it's better than who was in discussion for the other FDA head. So the stock reacting 23% is an indication of where the market feels as well.
More than that, throw this chart up. Nate mentioned it too. HIMS is the most volatile stock I've ever seen. True, it trades like a meme coin, basically. It's very, very narrative sensitive, and so if any piece of news comes out about GLP-1s, positive, it goes up 10%. Negative, it goes down 10%. Somebody can sneeze and it just goes up or down 10%. It's great for selling options, by the way. Although this week, I encourage folks to be very, very careful. And I'm glad that I was, because up 33.22%, which is really funny because last week we talked about it. And the narrative at the time was Amazon came out with some similar products. HIMS is dead. Well, not dead, but at least really, really hurt. And we're like, this is ridiculous. That'll take time to play out. Now, the other interesting piece of this appointment is this is an appointment that is very much in favor of and has spoken favorably of telehealth. Which is the industry that HIMS is in. Maybe a little bit different form of telehealth, but it's certainly that's what they do. That's the industry that they're in. So I think that HIMS is in a really good place here. The GLP-1s, like whether or not, this is a good thing as far as that's not core to HIMS as far as a long-term thesis. That's more of a short-term sugar rush. But like we can see the market is pretty freaking excited. We actually hit all-time highs yesterday. So
yeah, we did. And we briefly hit all-time highs today as well. I think we were up,
actually. Yes.
So we can't. Okay. So here's the thing. I think with HIMS right now, it is a weird time because it's uncharted territory. Like, we're hitting all-time highs daily. I think from a technical perspective, it wants to go higher. it could pull back. What I'm looking at for levels for pullbacks are around the $28 range, just where it's made previous highs. But I do think that if we break, we go to 33, 34, and before we consolidate, I really want to see a consolidation in the low 30s, simply because I want us to build a base there for us to move higher. And quite frankly, to get a little bit less volatility, because if we have no scaffolding, we can like swing wildly up and down until we find some footing. And we have no reference points on the upside right now as to what we could potentially go to, because the stock has never been this high before.
Yeah. Now, what do you think? So Sagi mentioned, HIMS is a 10x in the last 2.5 years. That's not my 10x because I've not been in it that long. But I do want to. It's almost Thanksgiving, so Tevis,
Yeah,
thank you so much for like just continuing to say, hey, you need to check out HIMS. You really need to check out HIMS. And I finally did. And I was like, just like most of the bears, when the Amazon news came out, they're like, oh, no differentiation at all in the company and their products. And I was just flat out wrong. I looked and I'm like, okay, I was wrong. I'm willing to admit it. I'm willing to profit from it too. So, and HIMS could very easily, it's so volatile, it could go back down to 17, next week. It's that kind of stock. Long term, I think it's very clear the direction the company is heading in. I think the stock will follow. There's Michael mentioned Pfizer, PFE a couple of times. I know that there's a few people talking about Pfizer, Moderna. They've taken big hits really since RFK Jr. Was announced as Trump's appointment over the Health and Human Services. Are you remotely interested in either of those names at all? Or what do you think?
What Michael is saying is making sense. Here's the thing, man. I think, and I have a friend who, when I was in dividend stocks, I was like, oh my God, this is the freest money in the world. I love this so much. But that was because I couldn't sell call options or cash secured puts. And now it just has changed my perspective, warped, if you will, because I can. And to me, I think buying anything for the dividend or the yield that it gives, like, it's just I can make more in a shorter period of time. Hey TJ, I can make more
right when you said cash secured puts on our end. I know it's delayed. That's when TJ commented. It's like the man. It's like his bat signal. He's like, all right, cash secured puts. I'm here.
I'm wearing a TJ Wheel Deal shirt, so I'm
not a sponsor.
Yeah, I'm not a sponsor, not paid. So look, with regards to Pfizer, like whatever the fundamental case is, if the argument is the dividends or the dividend yield, I don't really care, because I can make more by selling against it, right? Like I can make more through the premiums that it has. And if you're going to hold it anyways, then why would you hold it for the dividend when you can just sell against it? Like, I just think my whole perspective is changed a little bit because we are in this bull market. Like, don't get me wrong. I'm not saying that this is like a strategy for all seasons and all markets, but the market that we're in right now, I wouldn't be holding Pfizer because I think that there's companies that have more upside potential. And granted, I haven't, looked at Pfizer at all. Although, it is in the same sector that, what was it? Cassava Sciences was in, and they got rocked like 90%.
Let me pull up that chart.
So,
Martin Shkreli, who I'm not a big fan of, but he
right. Can we talk about this?
Yeah. I'll pull up the stock. You throw this up, and then you can look for the actual comment. So this is one that really tanked. Well, let me go to the 5-day because that shows it even more. 26 down to 83%. Actually, down 85.74%. In a couple, just like one day, like overnight. Like this is just down here. It's on some really, really bad news. Martin Shkreli has had a lot of issues, and like morally speaking, like not a nice person, not a good person. But he called this out actually the night before, so it was after the markets were closed, and so you could not buy any puts or anything. I wouldn't have done this anyway, but he's like, hey, if you're able to short this name, short it. And
I'm trying to find that tweet.
okay, let me pull it up then.
I actually found this while I wasn't even looking, just to give you guys a quick idea of what I mean when I say supermajority. This is the latest polling data from November 21st for Canada's seats. As you can see, if you add up all the rest of the parties, they don't even come close to the amount of seats that I guess the Republican equivalent of.
Okay, no one cares about Canada. Throw up the tweet here.
Okay, hold on.
All right, so here it is.
This
was 9:22 p.m. Central Time, because I'm on Central Time. If you have money on Robinhood or Interactive, short Sava now, which you can't do on Robinhood. But there was another one where basically, oh yeah, here we go. Is this financial advice? Yes. This is before the actual move. And yeah, got a little bit of reaction. Of course, shout out to Garcia. Instructions unclear. Kava. Not the same stock, not the same company. Yeah, this is a ridiculous move, is a ridiculous call. If anyone made some money on the downside of that, congratulations. But I mean, that's what can happen in the space. Probably not so much with Pfizer, but same industry. And with companies that are not in a mature phase, like Pfizer, like Moderna, that actually have products that they're releasing, just pipeline products, with some bad news, with some bad results in clinicals, like they can be really, really volatile to the downside or the upside. One thing that I would rather do, like Pfizer, it probably is fine. It probably tends to be that the market overdoes it over time, but RFK Jr. is not good news as far as an appointment. He hates big pharma. And Trump, it seems like, is giving him fairly free reign. Of course, it's not a dictatorship. He can't do whatever he wants. But I can just imagine that that's going to be a bit of a drag. Where I'd rather invest, if I was investing in the space, I've been looking at, I have some of Celera, which is a Canadian company. So you're welcome. I bought some Canada, a little piece of Canada. But there are a number of companies that are in the biotech space.
It's going to underperform. Sorry, continue.
It could, because it's from Canada. So, wouldn't shock me. That's a long-term play. I don't like, it's a very, very small part of my portfolio. It's under 0.5%. So it's not meaningful, but I'll probably build it out to 1%. Again, not meaningful, but it could be. Like if it goes, it does what I think it might do over the next number of years, great. And there's a couple of others that are in the space. I've also been thinking about XBI as well. It seems with some of the appointments that he has with Vivek as well, and also the FDA appointment, that with a lot of biotech, like it's been one of these bear market for a long, long time in that space. And I think now is the time to just begin looking at biotech. It's not a space I understand well. There's a couple of names that I find compelling. I'm not going to say them here because I don't want you guys to follow just because it's like, oh, Roy mentioned it. It's like, don't do that. I'm way out of my comfort level, but I may buy another one or two companies at like 1% risk tolerance. Just hold them over the next few years, or maybe just XBI, which is the ETF, which has been doing quite well, by the way. I think that there's probably going to be a lot better return on those than something like Pfizer. Could be wrong.
Yeah, I mean, I don't like to mess around with biotechs or pharma at all. I think HIMS is the closest I'm ever going to get to investing in those types of companies, because I have in the past and I've gotten burned. Similarly to Salva, right? Like they fail some FDA trial and all of a sudden the stock gets cut 80% overnight. But to each their own, I guess. This is turning into a crazy game, Roy. It's 1 point difference, 3 minutes on the clock. I need one more point from Bobby Portis and one more rebound, and I win money. But knowing me, it's not going to happen. Anyways, let's keep an eye on that as we go along. What else do we want to talk about? I posted on Tanner's channel, just trolling him a little bit, and people were like, can you please not talk about HIMS tonight? So I'm glad we're through that section. What else do we want to cover? There's a lot of stuff, actually.
Yeah, Bitcoin would be a good one to cover too. And kind of related, Carla commented on my channel. I bought Hood this morning at the top, unfortunately, just to watch it come down. Now
Yep.
questioning if I should sell at a loss and try to buy it once it comes down lower. If you're a trader, maybe. If you're a long-term investor, usually the best thing is just to invest in quality companies at price levels that you're comfortable with monetary amounts that you're willing to risk, and you'll do well over the long term. Over the short term, you may lose some money, you may be down for a little while. I remember, like back in 2022, every single time, because it was a bear market, every single time I buy something, it'd be lower the next day. It's annoying. That happens. The market may need to cool off and pull back a little bit. Robinhood, SoFi, Palantir, yes. They're a little overheated. If you look at the RSI, it's like in the 80s for some of those names. So it wouldn't be shocking if they pull back for a little while. Part of the reason why Hood is pulled back is that part of its narrative is tied to Bitcoin and, of course, crypto. They're offering actually more crypto. Ever since Trump was elected, Robinhood actually reinstated 3 of the 4 names that were removed from the platform before that they'd removed a couple of years ago. And then they added PayPay Coin and then Dog with Hat. Like yesterday, Vlad was tweeting about it. I'm sure that they'll continue to add a lot of names. Their crypto revenue is going to be like ridiculous in quarter 4. So there's going to be a little bit of pressure from those generous matching agreements that they give in quarter 4 specifically too. So it'll be a good quarter, maybe not as amazing as quarter 1 and quarter 2, but it's a good name if you have a conviction in the long term. I would just not try to time it because, I mean, it could just pump absolutely on Monday. We don't know.
Dude, I found it funny how Robinhood for the longest time were not offering like legitimate coins. Like, were they offering Solana or like Litecoin or like, and then immediately they were like, "Hey, Solana's on Robinhood," and then like 3 days later, like Dog with Hats is also, and I'm like, "What the heck is your priority list, guys?"
I mean, like that fits their platform though, to be honest. And I think like the issue is the SEC. Like just with Gary Gensler, they absolutely would not. That's why they removed both Cardano, which is I think a very like it's basically the most boring, stable, non-meme coin outside of Ethereum and Bitcoin to me. Solana, is very close too. One's very centralized, one's very decentralized, but both very legitimate. And it's just like weird that that the SEC, XRP maybe too. I know Steven loves that coin. I don't have that or Solana, but they removed them just because of the SEC scrutiny. Of course, SoFi exited the space because of that in their banking charter. And it really hurt the industry for a long time, unless that was really all you did, like Coinbase. Now all of a sudden things have changed and they're going to just really ramp that. So it's a good time to do that. I think that the Bitcoin bull market is not over. What is it at today? Did it break 100,000?
No, it pulled back, dude. It's at like 92, 93.
So is this over for Bitcoin?
No, this is pretty typical. I think it always has a pullback, and then after Thanksgiving, it runs pretty hard into the new year, like that Santa Claus rally. That's happened like every cycle, basically. It has support levels that it has to hit. I think like it could fall even further than this and still be fine. It'll shake out some people for sure, but at the end of the day, I do think it's going to break through 100, and I think it's going to do that before the end of the year. And it remains to be seen. Let's see what happens. But a lot of people are like, I sold cash secured puts on the miners this week because they're getting sold off because people are like, "Oh, party's over, Bitcoin's at 92," and I'm like, seriously, guys, like that fear greed scale is so juiced up that when it's at 97, 98, they're like, "Oh my god," like euphoria. And then when it's at 92, they're like, "All right, time to wrap it up, guys, party's over." And the reality is that you're probably new to crypto because this thing has some very aggressive, wild moves. And you got to zoom out. You got to zoom out to look at the trend. You can't look at it from a week-over-week basis because there are a lot of things that happen. And even more players today than ever before with regards to the MicroStrategy of the world, all of the miners, all of like to the point where we have nation states now I posted about this on X. Let me see if I can find it. But we have nation states that are starting to adopt. Brazil is going to be adopting a strategic Bitcoin reserve. Canada was actually looking to adopt a strategic Bitcoin reserve, or Vancouver at least was.
Yeah. And
Multiple
United States is
countries.
rumored.
Well, this is why they're all jumping in. And I talked about this before, this game theory, because essentially it's like, what's that song where you have to run around and there's musical chairs? It's like a musical chairs type of thing where somebody's going to be left priced out of the market because they can't build their strategic reserve fast enough. Now that the US has started the game, the US has started playing the music, and everybody's running around trying to build up their own reserve because they're trying to front run the US. Some are, some aren't. But when the US starts accumulating and building that, every dollar in the world is backed by the USD, right? Like they all have it as a point of reference. And if the USD has Bitcoin as a strategic reserve, like that bodes well. Now, that's one layer that we didn't have in previous bull markets. But then we also have this massive supply shock because you have Saylor going out like completely rogue and issuing more bonds to buy more underlying Bitcoin, over levering his company even more. And then it's a virtuous cycle on the way up, but it becomes a vicious cycle on the way down. But luckily we're on the way up right now. So he's just buying up the supply as well. And then you have the BlackRocks of the world. You have all of these massive institutions that are buying up all the supply. And the reality is the OTC markets. So basically Coinbase was, I think, the main OTC market maker. They essentially were buying up Bitcoin for the last 7 years so as not to move the market. And all of these big transactions happen on the OTC markets. That supply is now running out. And what you're going to have is you're going to have these violent moves because you're in a supply shock, especially if more nation states start adopting Bitcoin for their strategic reserves. It's like I'm very bullish. I think it's going to happen for sure. And if it doesn't happen to that same degree this time around, it will next time. Like it's a foregone conclusion. There was somebody on CNBC, and I'm rambling, but there was somebody on CNBC earlier today where Joe, the CNBC anchor or whatever, asked him, hey, like, do you think Bitcoin is going to zero? Like, would you bet your life that it's not going to zero? And this guy was like, hey, it's not going to zero right now because we've already reached that escape velocity. There is so much international and institutional attention on it that keeps it up. It's not just like a side pet project that some random dev started and it's a group of nerds that are mining this thing to buy pizzas. Like, it's gone international and it has that scale. And they were saying that like this is one of the only asset classes where it de-risks the larger it gets, because if you buy a stock like Palantir, for example, and it gets larger and larger and larger, it becomes a riskier investment because it's more detached from the fundamentals. Whereas Bitcoin, the more adoption you get, the larger it gets, it becomes further de-risked because you get more people that are bought into that.
Yeah. And institutions aren't prone to be like, oh man, it fell 10%. I better get out. Like they don't do that. They're not driven by emotions like us. There is, well, mostly like there is still some FOMO, there is still some fear, but for the most part, they're pretty insulated from that. There's multiple people in most institutions that have to make decisions on whether to change the strategy or not. Now, as far as, well, let me ask you this. So if Bitcoin pulls back and just keeps pulling back, at what level, instead of buying miners, are you just interested in buying some Bitcoin itself?
I'd probably, like, my Bitcoin position is like an unhealthy large, like relative to my portfolio.
Wow.
So
I didn't know that.
Well, let me take a look for you. So right now, my Bitcoin alone is 20% of my portfolio.
Oh, wow.
Yeah.
So you're a whole coiner then. So,
but
nice.
dude, it's up like 200%. So like I didn't start at 20, like I'm just hodling it, right? I'm not touching that Bitcoin. But it's crazy because if you talk about Bitcoin plus ETH plus CleanSpark, Marathon, Solana, and Coinbase, I'm
and
like
Robinhood, the Robinhood you own that you bought at 14.
it,
Oh wait, you didn't buy that.
oh wait, I would be at like, 30 to 35% exposure to crypto right now if you put it all together. Now, granted, a lot of that stuff I'm going to trade, like CleanSpark is a trade for me, Marathon's a trade, Coinbase is going to be a trade. I think that my Solana and my Ethereum, I want to consolidate that into Bitcoin eventually. But Ethereum usually and Solana usually run after Bitcoin peaks. So Bitcoin's going to peak first, and then the money is going to flow out to chase returns in these other altcoins. And so I want to take advantage of that trade. But yeah, it's a lot of exposure. I don't want to be buying more of it.
Yeah, I get that. I'm not a whole coiner. I thought about becoming that back in 2022, and instead just did more Palantir, which that was the right decision. But no, I'm at the point now where I own some miners. I actually completely exited miners 2 weeks ago when we were just pumping. I'm like, good enough. I'm good. It'll come back. Sure enough, and so I'm selling cash secured puts. I was selling just a couple last week. I've sold a lot more this week, including today. Very, very happy with the premiums, very happy to own at those prices. But some of those profits that I'm making off of the miners, I'm like, if Bitcoin really takes a tumble and goes back, below 70, I don't think it will, but it could. I need to buy some more Bitcoin. I have some, but yeah, I need to work towards that whole coin mentality. I don't think I'll hold like multiple Bitcoins or anything, but yeah, I've got, and the way I treat my crypto is it's just, set and forget. Like I don't have to worry about that. I don't trade it back and forth. I don't worry about the price. It's just there as my strategic reserve. If I need to buy something at some point, I have no problem selling that, but there's no reason to dip into it. And it's not like it's a pretty small percent compared to you. Like you're very overweight. I'm underweight actually.
Yeah.
Although I do have Robinhood, which is a proxy play for it, certainly, and it's done well. And some miners, and of course the coins that I own. So as far as miners, what which ones are you buying, and like what's your methodology on that?
Yeah. So I have covered calls that are probably going to hit for Marathon, and I'm not like I'm going to take the profits there and run basically.
Yeah.
So I wrote covered calls for Marathon at well, first of all, I rolled them because I had them at 25.5 for last week, and I rolled them for 2 weeks from now to 30s, and Marathon I think is at 27-ish. So that's probably going to get hit. Well, we'll see. I think if Marathon falls and I can buy them back very cheap, then I'm just going to keep doing the thing. But if I get hit at 30, then I'm taking my gains, and I don't care if it goes to 50, 60, whatever. I'm taking them at 30, and I'm fine with that because I bought Marathon at like 19, 20, and I can let it go at 30, and I held it for a period of like 2-3 weeks, or maybe a month, and I collected premium all throughout. So I'm fine with that. With regards to CleanSpark, I have the same thing going. I have covered calls at 20. And if it goes to 20, then, thanks for the trade, and I'm out. I also have cash secured puts at CleanSpark at 12.50. So if it goes down to 12.50, I'm going to be taking assignment of more. There were some technical levels that looked good there that I don't think should break. But if it does break, then I think it can fall down to 11, where I'll write more cash secured puts. So I'm going to be reloading a couple of times for CleanSpark as it falls. But again, 20 is sort of that range. So my initial position is at 15. I also had a position at 13 in another portfolio. And now I'm doing 12.50s and then 11s as like my absolute, lower level. And then I'm all out at 20. So that's essentially very simplistic, very, very easily the range for the miners. But I have been collecting covered call premiums throughout the last couple of weeks. 17, 18 for CleanSpark, and then the 25s for Marathon. I had to roll to 30s. But I did collect a couple of rounds of 23s, 24s for Marathon before.
Yeah, the premiums are great. And I like the exposure. I don't mind being assigned. Like one thing, if you're getting in options, and this is to our audience more so than you, Tevis, don't sell puts on names you don't want to actually hold. I've done that before, just chasing premiums. There is a degen name that I did today, not today, earlier this week. GameStop.
I'll share mine if you share yours. I also did that.
I bought 100 shares at GameStop, so not a large position, but I'm like, I don't mind owning it where it's at. This feels like it's the time in the cycle to buy a little bit of garbage. It's not a garbage company, but it is a meme stock. That's what I'm saying. Is that they have actually a pretty good amount of cash or cash-like assets on, but I don't want to own that business long term. It's just a trade for me. It's just a little fun thing. The miners, like before we pivot fully away from that and we show, I think most of the miners are just garbage businesses. I think that there's a lot of maybe not scammy, but scummy leadership. And I don't trust many of them because they do weird things. Well, they always dilute. That's part of what they do. Lots of stock-based compensation, lots of debt, depending on the model, lots of trying to invent new products. Like, oh, this is not our core business anymore. Now we're a data center. Now we're an energy company. There are some actual good ones, maybe. Like there's some that are better than others. I personally, I'm selling right now cash secured puts in CleanSpark only just because the liquidity is there, and it's okay-ish despite private jets and some questionable decisions. I don't want to own it long term. It's a trade for me that I will back and forth. Cypher I like a little bit better, but the liquidity is not there, though it is absolutely dumped recently. So maybe I'll start selling cash secured puts or just buy it and sell cover calls on the other end. But yeah, a little bit of degen right there. I didn't do cash secured puts. I did calls. Just bought the actual asset, and I will show. You can go and throw yours up though first.
I'm not throwing anything up. I'm just I'm just going to talk about it.
I see how it is. Well, yeah. So yeah, I already talked about my GameStop. I did that, and then I bought some KULR cooler. That they do some clean energy stuff that's related to nuclear energy. That was just a trade. I bought like 2,000 shares, fully out now. I do a lot of those. I just never really talk about them. But my trade position, me personally, I'm a long-term investor. Trading is just kind of fun for me. And so a very small part of my portfolio, and it never goes above 5% unless it like just really runs because it was a really good trade. That's what I'll trade back and forth with. So I'm careful. I know I'm not a great trader. I'll hit a few home runs each year. And then unless I feel like really, really confident, I even don't get it close to that 5%. So,
yeah. So what I did, and I can walk you through some cash secured. So this week has been almost exclusively cash secured puts for me because the market just hasn't been great for covered calls. I should have honestly written some covered calls, but like hindsight is 2020, right? I was waiting for a better price, and everything sort of faded into the end. I could probably do something more longer dated, like a couple weeks out instead of just weeklies. But anyways, I'll see what works best. So I did mostly cash secured puts. I did cash secured puts on CleanSpark, which I told you about at 12.50. And this is all weeklies. I also did cash secured puts on Tesla, which I'll probably take assignment of because I did them at 3.30 and Tesla's at 3.38. So we'll see where that ends up. But again, if I own Tesla at 3.30, like I'm not going to be really sad about it. Because I'll just go ahead and flip it for 3.50, 3.60, whatever, and just collect premium on the way. And then I did cash secured puts on Lemonade. Because Lemonade is one that I've been buying in the background that people don't listen to me on, but I'm already up 3x on my Lemonade stock. I mean, I was buying it at 18, I was buying it at 19. And the funny part is that I post about it and I show the actual like entry points, and that post gets like 5 likes. And then I just post like hymns to the moon, and then it gets like 300 likes. So,
the
okay.
thesis, I don't know. I looked into Lemonade a while ago, and I have no real feel of whether or not there's an actual moat there. I question that very much. Versus like it actually kind of reminds me. Oh man, I just lost it. There's another. Oh yeah, Upstart. So like Upstart, was all the rage back in 2020, 2021. It pumps and dumps here left and right too. And their whole thing was like, hey, we're AI backed and we're doing all these great things and it gives us this edge and advantage. I don't see it in the data. I just don't see it at all. Lemonade, likewise, is like I really question that thesis. And it's
So
an industry I don't understand well, and so I think that there might be something there, unlike Upstart, which I'm really questioning. But I don't make bets as a long term investor on things. I'm like, I think this might be okay. I think
Mhm.
this might be good. I need to be pretty confident with Hims. When I looked at it, I'm like, okay, this is dumb how I didn't see it earlier, or I just didn't spend time. And it's really impossible to miss that thesis. And it's a very, very simple thesis. And I think that's one of the reasons why it gets a lot of attention from your audience.
yeah, I think that we will do an episode at some point or another about Lemonade because there are things that I am liking around the company. With regards to cash secured, like wheeling, the premiums were really good on it because I mean this thing is up like 2x in the last 2 weeks, and they're really up because they reported great earnings where all the metrics are on track. I really want to anyway, maybe not because I don't want to go into like a whole case around like talking about Lemonade, but there are some definite strong pieces to push for a moat in terms of Lemonade, which we can talk about at another episode. I was just going to pull up
Yeah.
something around their AI piece, but we'll fall into a rabbit hole.
Yeah.
Um,
Why don't we plan to do that next week unless there's some
sure.
big breaking news? And I know Cyber Monday and Black Friday we'll talk about a bit. I don't know that we'll get to PayPal today, but think about PayPal. They're launching the advertising platform. Tomorrow is the day that they actually begin compiling the data for
Yeah.
selling to advertisers, future advertisers. That thing's going to ramp up, and it's not just because of Black Friday. They hit 52-week highs 2 days ago. They're in a really good place.
So
Um,
very quickly, just 2 seconds, with Lemonade, I think that just as a prelude for next week, I think that one of the main pieces around their bull thesis is their efficiency. They're taking insurance essentially similar to how SoFi is changing the banking side through technology. That's what they're doing with insurance. And a couple of data points. I mean, one that so they just recently had their investor day where they talk about how they're going to 10x the business, and they just got into car insurance. And with car insurance, they're now leveraging more and more this AI piece, automation, you could say. It's
yeah,
not necessarily AI, but it's similar to what Tesla does. So Tesla has the car send all the data back, and then based on your driving, they give you either a higher or lower premium because other insurance companies they take an average of a certain sample size, and then they say, okay, this is the average that everybody pays. But if I'm a fractionally better driver than you are, or if I'm a little bit safer or whatever, I'm still stuck paying that average, which is higher, and I should actually be paying lower because I carry with me less risk. And so Lemonade does this on a person by person basis through that use of AI for just their car insurance sector. And they do it through their app, like through their app download. It relays that data. They also have anyway. So that's one piece. Like that's the SparkNotes version. It's they're leveraging efficiencies to revolutionize and to actually get better premiums on this insurance space, which we know is going to be a massive space. And I can walk you through some charts and some of the graphs that I'm seeing to essentially show, okay, here's how this company is going to get there in terms of multiplying out their efforts. That wasn't the DGen play. That's a company that, I want to be owning and that I'm reading more into and I'm getting more bullish on. And a lot of what I'm looking at, I'm really liking. So I'm still formulating a full thesis around it. And if those cash secured puts get hit, then I'm happy with that. I'm probably going to go ahead and flip, a bunch of them because I already have somewhat of a core position in Lemonade right now. But the DGen play, just to end off this episode, was MicroStrategy.
oh man.
So I did some cash.
Why?
on MicroStrategy. Cash grab.
No.
It's entirely a cash grab.
Oh,
Dude, the premiums were too good to pass up.
you're chasing premium in a house of cards, dude.
I mean, I don't think so. A couple of things. I think first of all, I can roll this out. But I did so far out of the money. And secondly, it's ultimately going to be a proxy for Bitcoin. So if and when Bitcoin jumps back to 95, 100, then this thing, whether fundamentally is good or bad, it's still going to ride up, similar to the miners, right? And so that's how I justified it. But it's again super small percentage. I didn't do it with a large percentage. I only wrote one cash secured put, so nothing super large.
So I have an expert on this MicroStrategy as far as what they would say. Go ahead and throw the screen up real quick. And not this expert. It's this one. It's a trap. Don't do it. Like I honestly, like as a friend, you're chasing yield. Don't do that. There's other like names. You know, if you want to play, like if it's a small position, great. Like as expensive as MicroStrategy is, you know, as far as like the stock price, knowing what you have to put down for actual like cash secured puts, like it's may still be small for you because you're a billionaire or whatever, but like it is an absolute trap. It's not. I'm not saying it's scam. I'm not saying it can't go up. It can't work out. But when you get into that and like, well, I can always roll, and this is those are red flags. Just back up and say, you know what? Maybe I'll just do more clean spark or something they actually want to own. So I can sense from what you're saying is that you do not want to own the name, so you should not be selling cash secured puts.
Mm-hmm. Yeah, I mean that like my logical brain agrees with you. And I don't know. I think it was just a circumstance of this week because it just looked really good to pass up, especially today where I had a huge drawdown. I'm like, ooh, I can't really pass that up. But we'll see. It's like expiring in 3 days. But anyways,
Yeah. And
we'll see how it plays
the
out.
most dangerous thing about it is if it works out, because if it works out, you may keep doing this. And I can guarantee at some point, because you are chasing yield here and you do not want to own the actual position, you will get burned. Maybe not this time, but another time. So it's better if it's kind of smaller for you as far as a percent of your portfolio that you get burned now and learn your lesson. And I'm saying this as a friend because I've been there. I have totally chased yield before back in 2022. And I got crushed on a name. Like it was very painful. That and of course Palantir drawing down to my other positions, just in the whole market. Like I lost all of my very lucrative gains in 2021 and was reset fully from that bull year. So be careful. Instead of ending on that, are you buying Celsius? What are you doing with Celsius?
Yeah, that's a great question. I actually looked at Celsius because I just wanted to deploy money this week. Honestly, for Celsius, like the thing that scares me, and we saw a little bounce back, but the thing that scares me is the tax loss harvesting situation where I think we could still see further drawdown until the end of the year. If this was January, I'd be buying Celsius leaps any day of the week because I do think that Celsius is going to recover. It might take some quarters for it to recover, for it to go back to growth mode, but I do think that they're going to get there. I just am worried that I buy today and then tax loss harvesting kicks in and this thing's at 19 by end of December.
Yeah, myself, I have no confidence in them. I think that they'll be okay. I just see a lot of competition squeezing margins. I think the Pepsi deal at some point, they'll stop being a drag, and instead that'll be a nice boost. I just don't know when that is. I thought it might have been this quarter. It wasn't. I had a short-term trade. I lost like a few $100. It's no big deal. It was a small amount because again, I trade with a very small amount on riskier stuff like that. So, and you're not drinking a Celsius, so like those are all reasons why I'm very bearish. I also don't like the product that much, so Yeah, mention of a lawsuit as well. Like, and with RFK there, like there's just a lot of things against Celsius right now. I'd rather be in other names, even though I would say, I'm about 65% confident it's a bargain right here. But for
Hmm.
myself, I'm greedy and I'm cautious at the same time. Where I'm like, unless I'm like even more convinced than that, I just don't go long. I don't. I might at some point dabble with a small trade again, but that's it. Um,
So yeah, this is the thing, man. Like, I don't know. This is I think a longer conversation, but we're in this part of the market right now where I'm struggling to find new names that haven't massively run. Like, we're not in. Oh yeah,
PayPal.
PayPal. But PayPal, what's PayPal at? Like 86 or something?
Yeah, it's like 86 or 87. I mean, it's up 40 something percent, but like it's up from a very compressed base. The float is a lot smaller because they're buying back stock and they're launching all these new products, including the incredibly high margin product of advertising, which is launching earlier than expected under Mark Gurther.
Yeah.
Mark Gurther. I got to figure out how to. I'm doing a video on it tomorrow, so I need to make sure I get the name right. Who launched Uber's advertising business, which has a $1
Yeah.
billion run rate. Also, he helped launch Amazon's advertising platform, which is the largest advertising platform outside of Google, I believe. I have to double check that as well. And of course, Walmart's advertising platform, which he had nothing to do with, but launched a few years back. These are all differentiated advertising products, but they have a few things in common. They have that immediate connection to consumers, which shows the intent to buy. Uber is a little bit different there. They have a platform you can actually do that on, and they have mounds and mounds of user data that shows not just what a person looks at, but what they actually bought. PayPal actually has 400 million users and 35 million merchants that they're using to leverage on three different vectors as far as advertising. For those that are on the front end, as far as advanced offers that are trying to get those that are already users, you have smart receipts for those that just bought. Those don't cost really anything to implement other than the staff that they're bringing on. And then you have, of course, them selling the data or selling advertisements to those that want that, even if they're not currently a customer that's using PayPal. So it and that's just like one small piece of what's happening there beyond just like what's happening with e-commerce. Beyond, somebody asked there too, like a comment on there, like, are we over allocated to financials and fintech? We have a lot of tech. Like, I'm mostly tech that's not fintech.
Mhm.
But fintech has been largely in a bear market, and not just because of Trump. It would have happened under Harris, just maybe not quite this extreme. It's fully shifting from bear market to bull market. And there's going to be a lot of names that I think over this season, from holiday spend and over next year, as long as there's no black swan event or 25% tariffs, which absolutely could wreck this thesis, do phenomenally well. They're very well positioned, and they have some of them, like Affirm's run a lot, Robinhood's run a lot. I
Mhm.
still think there's more on Robinhood's, and it's a quality name. But SoFi, I think there's a lot more room to run over this next year, a lot more room. My base case is still 25, but I'm like, that's probably low, and I should probably bump that up with that lending platform that they have. And likewise, PayPal, like it will shock people what it's going to do over the next 5 years. I
Yeah,
can't predict the stock in the next one, but man, it's exciting times.
yeah. And I saw your video around like five stocks that you're buying now, and you were mentioning the advertising side of PayPal. That was a good video. I think that with SoFi, like it's tested that 25 level three times already in 2021. And that's the thing that if you break out of there, you can have a very quick run up. Um, but
Yes.
I mean, we'll see. We need to get the 21st. But I think if we do break through 18, 19, like 18, I think is just like the strongest resistance level right now. If we break through there, then it can go to 25, pretty quickly. We just like it has to be supported by the macro. Like if the market runs after
Yeah.
Thanksgiving as a whole, then yeah, we can definitely get there. If not, then it's going to be a little bit different. But yeah,
And SoFi is in the fair value range. PayPal, I think, is still underneath it, but it's close. Instead of just ridiculously undervalued when it was like $50, now it's a few good weeks move from being at the very beginning of a fair value stage for where it's at right now, not baking in the future. Now, in the future, SoFi and PayPal have a lot going for it. Robinhood does too, but yeah, it's a little different environment than at this time last year when just like these were available for nothing, and people were calling us idiots. Not our audience. These are the folks that actually bought, but people were like, "Oh, you're idiots because you're shilling SoFi and Robinhood." And 2 years ago, Palantir is like, yeah. If people still think that about like PayPal, let's see where it's at in a couple of years.
Yeah, I mean, we'll see. I just I'm looking for names right now because SoFi's run quite a bit, Tesla's run quite a bit, Lemonade has run, Hims has run, Bitcoin's run, and I'm like, okay, cool, like this is great, but at the same time, I want to still be like, I don't want to just go on autopilot mode for the next year until we have our next pullback. Like, I want to see if I can still find some names that haven't run and are primed for one.
Yeah. I mean, and to be honest, like I'm doing a little bit of that. I'm being cautious in doing that just because you can run from quality to junk. And admittedly, I'm buying a little bit of junk, but it's a small allocation for me. I'm not going to be like selling quality names, even if I find them expensive, like Palantir, for a bunch of GameStop. Like that may work out really well. I'm not doing that.
Yeah.
I just know there's a larger propensity to be burned if you're in names that you do not personally find as quality. Sometimes companies can surprise you, but yeah, master strategy, like no.
Yeah, I don't know. I'm mixed on that, but it's in the same camp that it was for you to buy GameStop. It was like, okay, well,
Yes,
I'm only doing one of them, and for me, it's similar to the miners. Of course, it's like way more levered up than that. So, I understand that it can drop more, but fundamentally, my thought process was, I'm bullish on Bitcoin, and this thing is going to track Bitcoin at least in at a high level. And I do think that Bitcoin's going to come back after probably, I don't, within the next couple of days, maybe, but after Thanksgiving is really when I think it's going to come back in an aggressive way and break through those highs. And it's a trade, but that's only if I get assigned, and if I don't roll. So both of those are two big ifs. Like I said, it is a cash grab, and I realized that from the very beginning. But at the same time, it's not like I'm going completely off the deep end and doing something ridiculously crazy. It's like me buying or being oversubscribed to CleanSpark. I don't plan on holding it, and it's probably risky for me to be oversubscribed to CleanSpark with regards to, this is what I intended as my initial position, and I have 2x or 3x that. Not great, but at the same time, like I view it in the same bucket.
All right, well, Nala is getting tired, so we need to end our stream.
I'm gonna hear it from Nala in the Twitter DMs. He's gonna be like, "You're a degen. What are you doing? This and that."
Yeah.
So I'm prepared.
That's what I love about you is, I have a little bit of degen in me, but like you get focused on because it's way more extreme. And so I can be like, oh yeah, I did a little GameStop, 100 shares, whatever. And you're like, master strategy, $500,000. Probably not, but hopefully not. But yeah.
No.
But anyway, yeah, Lemonade, I'm very interested in hearing more. I may be wrong. Like I've not studied that extensively. Maybe next week we'll talk about that as well as whatever news is going on. Pay attention if you're into fintech in general, what the headlines are reading as far as Black Friday, as far as Cyber Monday. It's going to be an exciting time. And for those that are Americans, happy Thanksgiving. If you're in Canada, no Thanksgiving for you.
No turkey for you. Thanks everybody for watching. See you in the next one.